The stressless trading method is based on logic, guided by a series of mathematical formulas. It takes the guesswork out of trading with a strategy that has clear rules and one certain goal: to build wealth over time. If you've watched the previous videos, you know that the method might look overly simplified, too good to be true, and you might have even noticed a few weaknesses. We won't attempt to deny either of those things. Instead, the inventor of the stressless trading method has provided a 3-year case study based on his investment in TECL. This story begins on October 26, 2018, when the TECL stock price was $12.18 post-split. As of July 9, 2021, the price was $58.28, which means the price has increased at a rate of 78.29% per annum and compounded over 2.71 years. Remember, as mentioned in a previous video, it's important to pick volatile stocks that have clear patterns of rise and falls. As you will soon see, the falls in price were not devastating as they often are with other methods of trading. Instead, they were hidden opportunities. During the time frame of 2.71 years, the inventor performed 811 trades in 988 days. You can see in this graph that the number of shares owned by the inventor of the stressless trading method fluctuated as the price changed. To state it clearly, as the price rose, the number of stocks he owned decreased. And conversely, as the price dropped, the number of shares he owned increased. While one can consider it natural to sell as the stock rises and buy as the stock falls, the stressless trading method has much more going on under the hood. Although any trading method could have profited with the same investment in TECL, the difference is that as of July 9, 2021, the inventor of the stressless trading method profited and owned more shares than he initially purchased. I'm sure that you agree about the significance of this one difference. Future videos will explain how this difference comes into effect. Let's look at this investment from a different perspective. This graph shows the number of shares the inventor owned versus the price of the stock. I've drawn lines to show the general trend that the number of shares owned based on the price is linear and thus logical. This is no surprise, I'm sure. But what is interesting to note is how the investment changed from a starting position here on this line with a very steep slope and a low value to this point on a line that is at a higher value and moving further away and more parallel to the horizontal axis. This shows that the stressless trading method has different levels of complexity that can only be recognized with the assistance of a pictorial or graphical representation. Also, the price at which each of these lines intersects with the x-axis corresponds to the price at which all stock would be sold, and that price is progressively increasing as the slope decreases. Conceptualizing the information can help you to know when to set new goals and price points, to be sure you are building as much wealth as possible without taking on too much risk. I've shown you a lot of graphs so far, but you're probably wanting me to jump to the end of the story. What was the percentage gain? The performance of the stock portfolio during the 988 days of investing? We can look at this in a couple of ways, but first, let's define a few terms. Cash value is the total money in a purse, assuming two conditions are true. For one, the total money or cash value before any trading activity on TECL is 0. This is that point when you have not bought or sold a single share. Secondly, only money withdrawn from the purse can be used to buy the TECL shares, and all money from selling TECL shares goes into the purse. So, the cash value can be negative, indicating money has been spent to purchase shares, or it can be positive, indicating all the money spent for buying shares initially has been recovered, and there is surplus cash. The other, more obvious term is stock value, which is simply the number of TECL shares in the portfolio multiplied by the current stock price. If we assume that the number of shares you own is always positive, the stock value is a perpetually positive term. The TECL portfolio value is the sum of cash value and stock value and indicates the dollars gained through investing in TECL, either due to trading or due to price appreciation in TECL. In a buy and hold strategy, for example, the portfolio value starts from 0 when the shares are purchased, increases linearly with price increase, and reaches its maximum value when the shares are sold, assuming the price has risen from the purchase price at the time of selling the shares. The only time it will be negative in a buy and hold strategy is when the price drops below the purchase price. The term portfolio value will be covered in more detail in the next video. For now, let's view the performance from a few different perspectives. Number 1. Cash value and stock price versus trade number. First, we'll look at the amount of cash the inventor had in the TECL portfolio during the span of the 811 trades that occurred during the 988 days of investing. The lowest point was negative $7,034.10, indicating that he had spent that much in order to purchase 590 stocks for $11.92 per stock, with the price at $7.85. The highest point is $7,200.02 when he owned 300 stocks and the price was $59.80, indicating that he had sold 290 stocks for $7,034.10 plus $7,200.02 to equal $14,234.12 at an average price of $49.08. Number 2. Cash value versus price. We can also look at the cash value as a function of price. It is clear that in the first phase of trading, the cash value of the TECL portfolio was decreasing, even as the price was increasing. At that point, the Stressless Trading Method had not been fully implemented, and the graphical representation that is vital to the long-term success of the Stressless Trading Method was not yet understood. As the efficiency of the method took hold, you can see that the results improved. In this plot, we notice that as price rises, in general, the stock value rises as well, which is to be expected, since stock value is the product of price and the number of stocks. But we also notice time windows where an excessive rise in price leads to a drop in stock value, because a fast, unstoppable rise in stock price triggers continuous selling in the Stressless Trading Method. Perhaps there is room for further improving this method by using the divergence as a signal for reducing the rate of selling. The inventor just wants to highlight once again that a pictorial view of stock value performance can also be used as an indicator, just like the pictorial view of cash value over trade number. In this stock value versus price plot, we can see that over trade iterations for the same price, the stock value increases. But essentially, if we follow the classical stressless trading method, we should own the same number of stocks at a given price over multiple iterations. In other words, if we owned 50 shares at a stock price of $50, then the price drops to $40 and we now own 60 shares, then when the price returns to $50, we should again own 50 shares. So, by using the classical stressless trading method, as the same price occurs during multiple iterations, the cash value should increase and the stock value should remain constant, The increasing stock value at the same price over multiple iterations in this case study indicates that variations of the stressless method, which will be discussed in later videos, can be significantly beneficial. The inventor wants to clearly indicate that the classical stressless trading method, while aiming to eliminate stress, has room for improvement and is an evolving strategy as we learn from experience. What is the primary purpose of trading? We have emphasized one viewpoint already. It is to increase the cash value of your portfolio while avoiding a reduction in stock value. For example, this graph shows the fluctuation of cash value and stock value versus trade number. If you focus on different points in this plot, you get the feeling that the cash value is always increasing at the expense of stock value. But other parts of the plot show that this is not really true. This becomes apparent when you plot the stock value versus cash value. As the graph shows, the trading experience with TECL can be broken into multiple phases. In the first phase, the stock value decreased when the cash value increased, and vice versa, although over time, for a given cash value, the stock value would increase. In the second phase, the cash value and stock value were both increasing, a very desirable scenario. The third phase is when a significant chunk of the stock was sold because the inventor of the stressless trading method needed cash for a personal reason. The fourth phase is considered the optimum phase, where your cash value increases while your stock value is constant. It's just like earning rent on your real estate property, isn't it? There are 3 points the inventor wants to emphasize here. Firstly, although the stressless trading method aims to eliminate your stress, how you apply the method could still depend upon your investment target, which is a personal choice. For example, if you plan to buy and hold, something the inventor never advises, you would be moving along a vertical line. If you plan to sell all your stock eventually, you will be moving along a line with a negative slope. If you plan to cash out gradually while having a steady investment in the stock, you will be moving along a horizontal line. On the other hand, if you plan to reinvest your gains, you will be moving along a line with a positive slope. The second point is this. If you only evaluate your portfolio numerically by calculating profit, you are missing the chance to see the impact your trades are having on your portfolio. Graphs allow you to see the big picture. As our example has shown, they may even reveal to you how your investment psychology is changing over time. The third very specific point is about cash value. Cash value is not related to the cash in your account. Cash value isn't impacted by your withdrawals or deposits in the account, although those do influence the minimum cash value, which corresponds to the maximum money you will spend in buying the shares. Cash value is only impacted by your actual purchase and sell of shares. If this is confusing, please drop a comment down below describing your confusion in as much detail as possible, and I will address it in the next video. If you want more information about this method, please call or email 617-501-9021 or email pratikji@gmail.com. If you're interested in creating explainer or marketing videos like the one you've just seen, then please email themindgardenforyou@gmail.com or go to our website, themindgardenforyou.com.